before there was ever my econ. I just did not know how to put it together, and when my econ came along, it really showed me how to put things together. So tonight, what I'm going to do, I'm going to do the W-4 form. I hope to do JT proud, because this is normally JT's area between the taxes and the Schedule C. It's actually both of ours, but I enjoy all parts of it. But first of all, what I want you to know is that the correcting of your tax withholding is just one of the aspects or one of the strategies that we use of the 5 different strategies. Be correcting your tax withholding is really probably about the first thing that you're going to do when you reach any new associate or any new person that you are trying to show what it is that we do. Millions of people are getting a tax refund at the end of the year, and they unfortunately believe that a tax refund is a good thing. But I was taught a long time ago that having a tax refund is like giving the bank money and let them use your money all year long, and they don't give you any interest at the end of the year when they give you back all that they didn't use. It's just a crazy thing why we do that, but we actually think that we're getting back something from the government, not realizing that you gave that to the government so that they could use it all during the year. You work all year, you get X amount of dollars to the government, and then at the end of the year, they don't even tell you thank you. They don't even give you a thank you card at the end, but they send you back the money that they did not need, that you had already given to them. But again, it's just the first strategy of the 5 different strategies that myEcon teaches. Of course, Beverly talked about building your good credit and eliminating debt, and then also talked about minimizing your taxes by way of the cash flow manager. When you are starting to minimize your taxes, that's when you start to get an understanding of the Schedule C form that we do. But realize that the Schedule C and correcting your tax withholdings are 2 separate strategies that we teach. Okay. Yes, they have something to do with the other, but without owning a business, you can't minimize your taxes by way of the cash flow manager. If you don't have a business, you just cannot do that. That strategy's out. But everybody here who are myEcon associates, you have that ability to take care of all 5 of these different strategies. But let's talk about the W-4 form, which is the form that I was actually asked to talk about. One thing that you have to understand about the W-4 is that they just recently changed it. You see, back in 2019, that W-4 form was called the Employees Withholding Allowance Certificate. That was just 2 years ago. So we've been using this new W-4 form, which is the Employees Withholding Certificate. It's still a W-4, but you notice that they got rid of the word allowance. Okay, when they got rid of the word allowance, that means that the days are gone away where people ask you, well, how many dependents do you have? And you just wrote down a number of dependents, and that was the wrong thing to do. The exemptions are taken away from that. But that was one of the things that happened with the Trump administration, that they changed the W-4 form, or they changed the way that they have employers take money from your paycheck. And they don't actually take it from you. You actually sign this W-4 form and tell them how much it is that you want them to take out of your paycheck. But let's take also, I'm going to introduce you to the tax withholding estimator. The estimator is something that came along when they changed the W-4 form. They say that it makes it easier to me, is the jury is still out for me. It's another thing, it's another tool that the IRS has given us so that we can possibly bring this down so that you're not paying as much in taxes during the year. And at the same time, you're not getting a refund. But this also helps the person that owed in their taxes last year. Because if they owed last year and it made no changes, they're going to possibly owe this year. But you can use this tax withholding estimator to make sure, or at least to keep track of what you're personally doing on your job. Okay? So during the course of showing you this, I'm going to use the Johnson family, which you people should really realize that this is a training slideshow that's in our back office. And we're going to use the Johnson family. The total income in that household is $105,000, where the husband makes $50,000 and the wife makes $55,000. In the example that I'm going to use, we're going to use the two dependents, age 7 and 10. And the Johnson family has a child care expense of $65,000 this year. So let's take a look at the W-4 form. Okay, it's broken down into 5 different sections. Let me back up a little bit. Okay, step 1, you put your name. Step 2, multiple spouse and works. Step 3, 4, and 5. So what you'll do, you know that you have to put your name, your social security number, your address, and your marital status up top. And then at the bottom, you sign this document, and that gives your employer permission to do what you have authorized them to do. But there's a major issue with that, okay? Step 1, here we go. That's where you put your name, address, and your marital status. Step 2, okay, it's multiple jobs or spouse work. Step 3 is where you put your claims, your claim for your dependents, and step 4 are your adjustments. If you notice that step 3 and step 4 are the only steps that you can actually put numbers in order to make this happen. Okay, finally, we have step 5. Step 5 is where you put your employer, or put your signature to this document, date it, and give that into your employer. Okay, but I want to kind of not slow anything down, but I just kind of want to have you get a real good understanding of what it is that we did. And I'm going to go back to this section number 3 and section number 4. And I want to play a video, hopefully it'll play, of JT last week. If you cannot hear it, please let me know as it plays, but it's only two minutes. Let me play this real quick before I continue to go into it.
Let's go to step 3. Step 3 is the first part where we start adding credits. But it is labeled claim dependence. And with that by itself could create some obstacles for other folks that's in the business, and they try to use this form and turn it in. So we've had several examples, guys, that HR departments are not educated and they're not accepting the forms because they're not educated. All right. They're not educated on what the form is for and how it's supposed to be filled out. So here's the example, and I'm going to clear it up a little bit. So when you do fill out a number right here, you have a number that would decrease your federal withholding. We put a number right here, it would decrease it. That means it's going to take less out of your federal withholding and put more back in your check. If you put a number right here, it would decrease your federal withholdings. And then you add both of those up, and it puts the total line right here. So for the sake of not trying to confuse you, the only line, for argument's sake, that affects your W-4 is line 3. All right, guys, hold for 1 second. My daughter is picking up my son.
Very
So we can, all right. Genesis, hey, you outside? Yes. Okay. All right, come on. I'm in training. All right, no problem. All right, sorry about that, guys. We can clean up the recording, but I'm still a father while I'm still doing work and training. All right. So this number right here is the only one that that affects the W-4. And the reason why I'm saying this because I want to solve a problem that some of our associates facing. That HR is looking when there's a number just right here in 3. They're looking for numbers right here because they're not understanding when you do the estimator. If you don't have any children, this is not the only spot. Or children is not the only thing you can use to get credit. This is just the only spot that you can put it to get a credit to help adjust your W-4. All right. And so we have a fix for that. I have a fix for that. And if it doesn't fix it, then we'll move forward with teaching our associates to escalate. But I wanted to make that clear. Okay. And we'll build on it once we get moved forward.
okay. Now, I want you to remember that. And remember that you have seen that before coming from JT. Okay. In step 3, it says claim dependence. And the first thing that you notice, it says, it gives you your income range, $200,000 if you're single, $400,000 if you're married filing jointly. But the first line says multiply the number of qualifying children under age 17. Okay. So they're expecting a number there. Remember that. Okay. Or other dependents on this line. And then it says add the amounts above and enter the total here. So right there, if you have no children, you would possibly have nothing on that line. Okay. But remember what he said was that we have people that work in the human resource department who are not trained to understand what the W-4 form does. Okay, so with that said, let's go to the W-4 form. On the very first page, or page number 2 of the W-4 form, okay, you have your purpose for it. It says complete a form W-4 so that your employer can withhold the correct federal income tax from your pay. If too little is withheld, you will generally owe when you file your tax return and may owe a penalty. If too much is withheld, you will generally be due a refund. I'll tell you right there, if too much is withheld, you will be given your refund. They'll give you your money back. Then it says complete a new form W-4 when changes to your personal or financial situation change, or and it would affect the entries on your form. Okay, so it tells you right there in the first couple paragraphs. You know, you should revisit your W-4 form once a year. And how many people do you know that started a job maybe 5 years ago, filled out the W-4 form, and never looked at it again? And worse yet, you have people who have started a job 15 years ago and never went back to the Form W-4 form. You know, because once they fill it out, when you start your job, you'll never see it again. You don't even know about it. And I say that because I was in the tax business, okay, and had no clue about a W-4 form. Okay, the other thing I'd like to bring your attention to is down here a little bit further down. It says when to use the estimator. Consider using the estimator, and then it gives you the website where it is, if you expect to work only part of the year, have dividend or capital gain income, or are subject to additional taxes such as additional Medicare taxes. If you have self-employment income, use it. Prefer the most accurate withholding if you prefer the most accurate withholding for multiple job situations. Okay, now in this case, we will be talking about a married family, okay, but just kind of want you to understand that and notice that step 3 and step 4 are the only places that you can put dollar amounts on the W-4 form. Okay, the very first top thing of it says complete steps 2 through 4 only if they apply to you. Otherwise, skip to step 5. Okay, there again, 3 and 4 are the only place you can put your numbers. And they say, if it doesn't apply to you, you'll look at this space here where it says claim dependents. And if you don't have any, you will skip over that line. Okay, but just refer back to that video that you saw from JT. You know, they set up this form, and I believe that they'll probably change it shortly, you know, because it is confusing to a lot of people. So don't feel bad if you're confused about the W-4 form. It's that way for everybody. Okay. And then it says step 2, multiple jobs or your spouse works. Complete this step if you hold more than one job at a time, or 2, you are married filing jointly. Of course. Excuse me for a second. Let me not turn that on. They must have known unless that was Terrence. Okay, it says, or if you are married filing jointly and your spouse also works. The correct amount of withholding depends upon income earned from all your jobs. And then it says, do only one of the following. First thing is use the estimator for the most accurate withholding for this step. And that's going back, introduce you to the estimator. Okay, the next portion says, use the multiple jobs worksheet on page 3 and enter the results in step 4C below for roughly accurate withholding. Okay, that's the multiple jobs worksheet on page 3. Now, it literally looks like it's kind of getting strange because you have to read each of these things, but the IRS will put it in bold if they want you to read it. Okay, then last but not least, it says if there's only 2 jobs total, you may check this box. And then there's a box on the side where the check mark is. It says do the same on form W-4 for the other job. This option is accurate for jobs with similar pay. Otherwise, more tax than necessary may be withheld. You see how you got to read everything that's on the line? Okay, it says do the same for your other job. Otherwise, more tax than necessary may be held. If you don't read it and check that little mark, you might be in trouble. Okay, here's a tip. To be accurate, submit a 2021 Form W-4 for all your other jobs. If you or your spouse have self-employment income, including as an independent contractor, use the estimator. Okay, they give you these tips, but if you don't take the time to read it, you're going to kind of be in trouble. It says complete step 3 through 4 on Form W-4 for only one of these jobs. Here, complete 3 through 4 for only one of the jobs. And again, it is in bold, and they capitalize the word one. Okay, leave those steps blanks for the other jobs. Your withholding will be most accurate if you complete steps 3 through 4 on the Form W-4 for the highest paying job. So they're giving you step by step right there within that step 2 section. They're telling you exactly what you need to do. Okay, but you have to take the time to actually absorb what they're saying. But it also said do only one of the following. So what we're going to do is use the tax estimator, okay, because that so far has said that you're going to get the most accurate on your W-4 form. Okay, so like I said a little bit earlier, inside your Form W-4 or inside your back office, you have this W-4 calculator training, okay? Make sure you go back inside, check it out, go step by step, learn to do the presentation, or, just show it so that you'll understand. Now, you guys all know that I'm always talking about using your tools. So at some point, I'm going to ask you to have your phone ready so that you can follow a QR code. Okay, so now the W-4 calculator, it protects against having too little tax withheld and facing an unexpected tax bill or penalty at tax time next year. Know that the average refund is $3,000. You may prefer to have less tax withheld up front and receive more in your paycheck, which is what myEcon recommends. Okay, it's the first strategy of the income shifting membership. Okay, but now we have to give this disclaimer. myEcon does not guarantee that you will receive an increase in your check by adjusting your W-4 form. Results will vary based on each individual's unique financial situation. Because remember, I told you, some people owed last year and they're going to owe at the end of this year if they did not make any changes. So you cannot guarantee that somebody's going to get extra money in their paycheck by fixing their W-4 form. Okay, they may have a different journey than you think. Okay, again, we're going to deal with the Johnson family, $105,000 household, 2 dependent children with child care of $6,500 a year. Okay, when you do your W-4 form, be sure to pull out your latest tax stub. And this is including the people who you are talking to, your new associates that you brought in. Make sure that they have their latest check stub so that they can go through or they can actually see where they stand today when you go over the W-4 form with them. Okay, again, here's the address. Type W-4 calculator in the search bar, click search. The tax withholding estimator will show up right here. And just click that tax withholding estimator. Now, there's a QR code. It's gonna come up a couple of times. If you would take the time, just scan that QR code, because I like for you to participate with me as I explain the W-4 form. But I want you to participate for yourself. Okay, very first thing, let me change the view here. And I had already went to the W-4 estimator while I was practicing there. Let me bring it up here so that we start in the same spot. Okay, you notice that on this side, on the right-hand side, I'm bringing up the estimator. You should be able to have it on your phone by clicking that QR code. If anybody has a problem with that, just kind of speak up, because I will be going along. You'll see it on my computer, but you might want to really put your hands on and work it inside of yours. Okay, so we're going to click use the tax withholding estimator. Okay, and you see it comes up right away, just as it shows inside the form. It says the about you is the information that best describes how you anticipate filling out your tax return. The Johnson status is married filing jointly, and no one else can claim the Johnsons as a dependent on their tax return. So on your phone, you would click married filing jointly, and then where it says may another taxpayer claim you as a dependent on their tax return, click no. Okay? Then it says the Johnsons will be claiming as dependents on their tax return. Okay, so you go here to where it says dependents. It says, do you plan to claim dependent on your tax return? Okay, will somebody mute their microphone? I can't tell who it is. Okay, thank you. Okay, so You click yes here, and then it's going to ask you how many dependents do you anticipate claiming on your tax return. You have a drop-down menu, click 2, okay? And which is just what it says. Then it says, hold on, I think I went too far. There we go. Okay, it says, both Mr. and Mrs. Johnson will hold a job with federal income tax being withheld. Okay, and then you go to the income section. It says, do you or will your spouse hold a job throughout this year? You click yes. Okay, both expect to hold one job each. The Johnsons do not receive any pensions. Okay, so right here it says, how many jobs do you expect to hold this year? You clicked 1. Okay, how many jobs does your spouse expect to hold this year? If your spouse is working, you click 1 for your spouse. Okay, will you or your spouse receive income from a federal pension this year? The answer is no. Here it is given to you right here on the side there. Okay, the next section is your tax withholding estimator. Okay, the Johnsons do not have any other sources of income. There's your other sources of income. The Johnsons do not fit any of the demographics. You go down and you look at the demographics, and demographics say, I will be 65 or older. So the answer is no. My spouse will be 65 or older. No. I am blind. My spouse is blind. The answer, they don't fit any of that demographic. So you click and go to the next, the income and withholding section. Income and withholding is the income and withholding for each job that you earned income from this year. Mr. Johnson plans to hold a job the entire year. He's paid twice monthly, and Mr. Johnson's most recent pay period ended February 19th. And that's just in this example, but you go to the date of your most recent paycheck. So on the income and withholding section, you expect to hold a job the entire year. You click yes. How frequently are you paid? Drop-down menu, it says twice monthly. But notice there's every 2 weeks there and twice monthly. Every 2 weeks has 26 pay periods in the year. Twice monthly only has 24. Okay, that means he probably gets paid on the 1st and 15th of the month. So let's click twice monthly. On what date was your most recent pay period? You click that line, it's going to bring up a calendar. In this example, we have to go back to February. And it was the 19th. We'll click that. And let's go to the next little section here. Okay, there's the February 19th. Okay, Mr. Johnson earns $50,000 a year. Mr. Johnson does not expect any bonuses. And year to date, Mr. Johnson has paid $524 in taxes. So let's go here. What's he expect to make? $50,000. Okay, will there be any bonuses? No. Okay, will you expect to receive any? No, you can skip that. Using your last pay statement, enter the federal taxes withheld. It says here 524. Okay, so this is when you pull up your paycheck stub. On the side here, you see where it's got current and it's got year to date. Okay, so it says year to date, Mr. Johnson has paid 524. And if you can see that 524 under year to date, that's what it is. It's 524. Now, how much did he pay from this paycheck? It was $131. And that's under the current column, $131 you put in right here for the pay period. Okay. Then it says Mr. Johnson does not contribute to a 401k or other cafeteria plan. So you click no here. Okay. And then you got your spouse's job. Okay, so now we're going to go to Mrs. Johnson. And I believe I have, I don't have her, well, it'll show up. Okay, so we're going to click here, your spouse's job. Okay, it says, does your spouse expect to hold a job all year? Yes. Okay, how frequently is your spouse paid? She also gets paid twice monthly. So you drop down menu, pick twice monthly, and on what date did your spouse most recently pay period end? Okay, again, in this example, she was back in February 19th was her final paycheck. Okay, Mrs. Johnson earns $55,000 a year, and Mrs. Johnson does not expect any bonuses. Okay, so you go to this section, enter the total wages. Okay, that's her $55,000, and she's not going to get any bonuses. Okay, so are we all good together? You know, hopefully everything is all right and you're following along pretty good. Okay, then it says year to date, Mrs. Johnson has paid $624 in federal taxes. There's her paycheck stub. Okay, so we'll find, using your last pay statement, enter the federal income tax withheld. Okay, so her year to date, Mrs. Johnson has paid $624 in federal taxes. Again, you go to year to date, look under federal taxes, and you got $624. So we'll click that 624 in that side. How much did she pay this pay period? Okay, according to what's on the sheet, she paid $156. And you go to the current, and you'll find that $156.04 there. Okay, so you want to put the 156 here. And she did not contribute to the 401k on her job, so you click no there. Okay, then when you click next on both items, you go to where you have your adjustments to your income. Now remember, adjustments to your income is section 4 of your W-4 form. Okay, just kind of keep that in your head. Think back to the form. Okay, it says adjustments to income are adjustments that will have a significant impact to your tax obligation. The Johnson family doesn't know, so they opt to see adjustments. So go here, opt to see adjustments, and there they are. Okay, the Johnsons do not have student loans, education expenses, or IRA. So you leave all those blank right there. The Johnsons, excuse me, do not have health savings, account deductions, moving expenses, alimony paid, penalty for early withdrawal or business credits. The Johnson family does not have any adjustments to income. And then click next. So you'll see there's a whole list of adjustments. Those adjustments that we read on the form are just the same thing on the estimator on your phone or your computer. We'll click next. Okay, and this portion goes to the deduction side of your W-4 form. Okay, it says deductions from income. The Johnsons qualifying for a standard deduction of $25,100. Okay, the family does not have more than $25,100 in itemized deductions. Okay, so you'll see right here, you have your choice of going either itemized or take the standard deduction. So they're going to take the standard deduction, click that number there. And then you go and click next. Tax credits. Remember that portion, remember JT, what he said? In section 3, line 3 is the only place that you can take credits on the Form W-4 form. And again, reminding you, If the human resource department does not see anything on line 3A and 3B, where it asks for a child, a qualifying child, or other dependents, they're going to look at line 3 and wonder where that number come from. But as long as you know that that glitch is there, you can anticipate the questions that come after. Okay, so tax credits. Let's see the tax credits. Okay, the Johnsons have 2 children under the age of 17. So there we go right here. Once you click see tax credits, the very first thing says enter the number of qualifying children under 17. Drop down menu, there you go with your 2. Okay. Then it says child and dependent care tax credit. Will they be able to qualify for that? For both of their children. Okay. Remember, what they had as their estimate that they're going to spend in child care was $6,500 a year. Remember that from the very beginning. Okay. There it says the Johnsons paid $6,500 in child care. The Johnsons do not qualify for earned income credit because they make too much income. The Johnsons do not have foreign tax credit, education, retirement savings, or homeowner credits. Okay, so here we go right over here. They do not qualify for earned income. They didn't adopt any children. And here's where it shows your foreign credits, your educational, retirement, homeowners. Okay, and then also the elderly, disabled business, alternative minimum tax. Okay, so they do not qualify for elderly or disabled business. It's all telling you there. Then it says click next. So you click next on the form. And then we get to the very end. Okay, once you get to the end, I don't know if you can see it better on the right-hand side or not, but their anticipated tax obligation is $3,993. But if they continue on that same track, by the time December 31st gets here, they would have put in $6,888. Because remember, at the beginning of the year, when they first started their job, they signed a W-4 form stating that it's okay for the employer to take out X amount of dollars. Okay, so if they change nothing from the very beginning, you notice that they got a refund of $2,800.95. Okay, with this section here, you got the little arrow that lets you know, are you going to owe or are you going to do a refund? This is the part that where I say the jury is still out with me on the estimator. This is the part that if you were to check your status on a quarterly basis, just as you did your quarterly taxes, and as business owners, you have to get in the habit of doing things on a quarterly basis. So why not check the status of your W-4? Would you rather know March 15th whether you're going to owe at the end of the year? Wouldn't you like to check on June 15th, see where you stand during the year? And then at September 15th, see where you stand. Did you follow the right thing all during the year? That's what the estimator can do for me. The estimator does not fill out your form for you, but it lets you keep a record so that you know where you're going to be. Okay, you can make an adjustment down here to check it out and see what you want to do with it. Okay, let's go here. Okay, it says the Johnsons learn about the advantages of investing and owning a home-based business. Hot dog. You brought your new person into myEcon. They're just learning. Okay, And by you understanding how your W-4 form works, you can teach that new person how to adjust their W-4 form. Get them in the habit of doing something on a quarterly basis. The Johnsons click on the income and withholding link. Now, there's two ways that you can click on the income and withholding link. You could either go to the top here and go through each one of these little sections there, or you can continue further down your phone and you'll see your About You section is printed out. Your income and withholding is printed out. Your adjustments is printed out all the way down here. So it says go to your withholding link, your income and withholding link. So I'll just click edit here. Okay, so it goes right back to my income and withholding link. Okay, so here we go. The Johnsons click on the income and withholding link. Mr. Johnson changes his answer and contributes $2,895 to his 401k. He's going to take that $2,800 that he would have received as a refund, and he's going to change his answer. He's going to find that little section where it says, did you or will you contribute to a tax-deferred retirement plan? Remember, he originally said no, but he's going to change his answer to yes. Okay, how much do you anticipate contributing this year? He's going to take that $2,895 and put that in that section there. Okay, so Mr. Johnson changes his answer. And then it says adjustments to income. Now, you have to kind of go to the top here and click through. You'll see that it's the About You section, the income and withholding section, the adjustments to income section, which is the one that we're looking for. And, here's the rest of them. I'm going to spread out a little bit further here because it is written out on a broader view on the computer. It may be written out on your phone too, but on a broader view on your computer, it is written out. But we're going to go to the adjustments to income. It says the Johnsons they learned about the business. The Johnsons clicked on the adjustments. Let me not go through that. It says the Johnsons learned about the advantages of a home-based business and decided to get started in myEcon. Of course, I need to read that. The Johnsons clicked on the adjustments to income link, and the Johnsons estimate that they will have a $5,000 in Schedule C business losses. Okay, it's not a bad thing to have a business loss. So let's go here and see just with adjustment where we could put that. It's not student loans, it's not educator, it's not deductions, health and savings, but right down at the bottom where it says certain business credits for reservists, performing artists, and free-base government officials. This is the place that you would put that $5,000 at. Now remember, when someone's just starting a job or they're just doing this, they have no idea what number to pick out of the sky. To say, well, my business is going to lose 5,000. My business is going to lose 1,000. Well, I don't want my business to lose any. That's what the average person is thinking in their head. Okay, but by understanding the minimized taxes strategy that we have, using the Schedule C, it lays out what your business expenses were during the year. It's the part that Beverly was talking about a little bit earlier, where she said, you got your travel expenses, you got your mileage on your car, you got your child that you can hire. Okay, so telling someone to just put $5,000 there is not a good idea. Let them go through more and more of the myEcon training that we have. But just remember that this is just a W-4, but you have to have some kind of idea of what's going on within the Schedule C. Okay, so we'll click next there, or we'll go back. We'll go back to the results page, the last one, since we made the change there. Okay, now you see that the anticipated tax obligation is $3,045, but they still are putting a lot more money in. But let's see what happens now with these different changes that we just made. Okay, by making that change, they now receive a refund of $3,843. But you got to remember, by not joining a business, they had a refund of $2,895. That's $948 extra that they got into their paycheck just by making this normal change, this small change. You know, it's a lot to understand what happens within, but if you go over this W-4 training and you begin to understand what the W-4 does and its place from the very beginning, the easier it's going to be. Okay, so that's $948 extra that they have. Now, what you could do at this point, and I'm going to go full screen so you'll see, okay, because this is the last step. Now, remember in the very first step where you put your name, your marital status, then at the bottom of the page, you signed it and dated it, and you gave that to the employer. Okay, if I click this print button, I'm kind of expecting that somewhere along the line, it's going to tell me or show me where it filled out the W-4 form. That's not the case. Okay, so that's why I say that the estimator is something that you need to know about so that you can keep in your records, because it's not going to change it. When it's all said and done, you have to fill out that piece of paperwork at the end. Okay, so now remember, in this case, they did make a change. And there's a portion of this estimator that if you don't know about, meaning that you're taking this training, you're going to find out about now. You can move this slide back and forth just a little bit, and you see when you move the slide back, another menu appears. Okay, if you did not know that, you're kind of what they call SOL, you know, or what my dad would say. Okay, but if you back up just a little bit, you have a different form. And right here it says, how do I make this adjustment? If you click that, how do I make adjustment? Another menu will show up. And then it has right here where it says Form W-4. You click that, and it will actually populate a Form W-4 form for you. Now you notice on this Form W-4, being that I moved it down to $3,200, having a $3,200 refund, is saying that this is what you need to add on to line 4C, number 4. That's it. You know, if I did not go back quite so far, let's say if I were on the line where it was, I want to go back just a little bit so I get that pop-down menu. How do I adjust it? Form W-4. That number can be different, or it would be different. Okay, so here's the second W-4 form. And that number here is, you know, for extra withholding, put down $20. Okay, when you put down extra withholding, that means that they're going to still take more money out of your paycheck. But the whole idea is to get that number down to 0. That's why I use that slide right here. And I actually went down to 3,200 in order to get $7. Okay, so let me go back and finish the presentation. And you notice, because the Johnsons learned how to income shift with two simple strategies, they improved their finances in 3 ways. The Johnsons redirected their tax overpayment to their 401k. You see they got it in their 401k here. Mr. Johnson's employer matched the 401k dollar for dollar, got an additional $28.95, only because they made a little change in the W-4 form. Just because it made a little change. Okay, Okay, then it says investing into their 401k and starting a business lowered their taxes by $945. They had a total income shift of $6,738 just because they changed the W-4 form. And I like to know now, anybody got any questions about how or why they need to change their W-4 form?